All right, what's up, guys? Today I'm going to go over the week of March 16th. Um, Busy week this week in terms of, big EPS reports, a lot of economic data, key events going on this week. So I'll go over all that. And then in terms of individual setups, there's actually not a lot. So this week is going to be more of I'd call it a watch week. I already have my positions on, which I'll go over as well. And then we'll see what happens with these events. So to start though, for the economic calendar. So PPI we have on Wednesday, FOMC on Wednesday. That's going to be the big day. So, PPI might be a mover, but it's really going to be a chill day to watch, what that rate decision is. I'm expecting no change on the rate. I don't see it being anything else, but, we'll see how the market reacts to that. Thursday, you do have initial jobless claims as well, just as another possible mover for 8:30. But yeah, Wednesday, Thursday are the big days for economic data. And then we do have an NVIDIA keynote event tomorrow at 2 p.m. Just something to note for added volatility. So not sure exactly what they'll go over, but I'll be tuning into that just to see. Other than that, if we go into some individual names, so the big name this week, there's not too many names reporting earnings, but MU. So MU, I'm heavily positioned with some options going into this, but in terms of what I'm actually looking for from this report, not only do they need to follow through, they really need to, they need to guide higher, much higher than what's already been guided up. So a couple of numbers that I say you should keep an eye out for. EPS, I would love it to come in over $9. So if it comes in over $9, you start to see, okay, the acceleration's real, it's really there, and it's happening now. So over $9 in EPS, and then if you also see over $20 billion in revenue, maybe even higher, or directly below, but ideally above $20 billion in revenue, again, shows you it's real, shows you the change is happening now, shows you the demand is accelerating. And then, one other thing, they guided up on margins a lot. So I believe their margins last quarter were, I want to say like 55, 56%, maybe a little higher. But if they can guide their margins up as well, quarter over quarter increase to, let's say 65, maybe a little lower, or as long as it's 60 plus, again, another argument for that real acceleration. So just to recap, over $9 on EPS, over $20 billion in revenue, over 65% on their margin. If you get any of those numbers, I don't think 500 is out of the realm of possibility. In terms of undervalued stocks right now, looking at what their forward earnings growth is looking like, MU is probably one of the most, if not the most undervalued company in the market right now. So, that's just the facts, and then we see what happens. But, in terms of positions for that, I do have one MU 480 call for 327, so not next week, the following week. And then I do have an 800 call. I have a few 800 calls on SNDK just to be able to play that MU move, without really getting too affected by the time decay. So that's my way of playing that MU move. But yeah, other than that, big economic events, huge earnings. It's really only one name, but it's a massive name. So, even for me right now, I'm really just taking this week as a chill week. So I'll go over a couple of setups I like that are developing. I'll go over SPY and QQQ like I always do, but again, keep in mind, kind of a chill week for me. But yeah, let's get into some charts. Let's look at SPY first. So a couple things on SPY. Number one, the trend is extremely clear. We're under the 9, we're under the 21, we're under the 50. But not only that, it's not this crisscross ugliness like it was even a couple weeks ago. We're starting to get that follow through, and we're also starting to get some real separation in these moving averages. So it's showing that this could last a little longer than, maybe I was thinking in the beginning. But a couple things to note. Massive level I'm looking at for this week. We are in a downtrend. Not to say you can't catch these uptrend moves, back to the 9MA for, the mean reversion or, price to revert back to where it should. So big thing I'm looking at here. You have a clear low. and you have a clear high. So we mark up these fib levels. We start targeting, you know, this weekly range, I would say here. You know, you might get a liquidity sweep under that 0.79 fib level and it comes back up, but you have 2 weekly supports and you have 0.79 fib coming up. So Fibonacci retracement is definitely possible if the market wants to bounce this week. The other thing that, you know, just kind of that's in the back of my mind going into this, if MU does deliver, the market will follow through. You know, and it's, you know, no different than if MU doesn't follow through. But I'm looking at it like we're stretched from the 9MA, we're approaching 2 weekly supports, and we're approaching 0.79 fib on a larger time frame. So more reason for upside than it is downside. That's really all the thinking has to be. You know, you don't have to be right or wrong, but what's in your favor? So that's what I'm seeing is in my favor right now. You know, a couple things against me. Weekly levels obviously aren't as strong as monthlies and quarterlies, so I'm going to be a little cautious. Maybe I'll size a little less if I do enter long. And then the other thing, you do have a little bit of a volume acceleration on the downside. I will say it is good that Friday's you know, volume was less than Thursday's on that really large outside day, but you know, no indication that this could go down more, no indication that this could go up more. I'm looking at it from, you know, what events do we have this week? I look at them as more catalysts than, you know, failures, but they could go either way. And, you know, what do I have that's giving me a bullish bias versus a bearish bias? So I have more supports than resistances here. We're really stretched from the 9. That's the information I have. So let's take a look at QQQ to see if we could get some confluence with that. But I really like SPY on any, you know, if it breaks 659, test 657, maybe you enter on that 659 break back up. If it tests 659 and then just breaks back above 659, maybe you enter there as well. But I'm looking for, you know, this whole 660 to 657 range. I'm kind of looking for a little liquidity grab, and then it goes back to the upside to give you that move back to the 9. So let's take a look at QQQ though, see if we get some confluence here. Because QQQ has a similar range. Let's see how this is sitting here. Interesting, very interesting. So this 0.79 has actually been a wall for some time. All right. So, you know, honestly, a play here, and they might do it to this exact, you know, T. If we get 589 on QQQ and then we get that liquidity grab back up to 594, that's another indication, you know, we can go long here. So you figure QQQ testing 589 should correlate with, that should correlate with 658. It might correlate with 650 if SPY wants to act a little stronger than QQQ. But, you know, ideally, if QQQ can get that grab down to the monthly, SPY should have tagged one of these weeklies as well. So that's what I'll be looking for. So you can correlate QQQ and SPY. Do they tag one of their monthly and weeklies below? And then, you know, kind of sweep back up from those lows. If we just rip or gap up, you know, over the weekend, I'll probably just leave it. But QQQ on this 0.79 fib has been phenomenal. So, I mean, any follow through off of this could start to move back higher. But, you know, again, all of them have to be played lightly. You know, we are in a downtrend, but just looking at it from what can happen, you know, next perspective. But yeah, let's look at some individual plays. So before we get into, you know, more, I guess, randomized plays across all industries, I want to focus on memory. So MU, just to show, you know, fantastic chart. Gave you a beautiful double bottom, tried to sweep under the 50 MA, couldn't, got bought up really quickly. Great volume on Friday, over the 9 MA, over the 21 MA, over the 50 MA. You know, when you see a stock like that and SPY is under all 3 of those moving averages, you know, that's not something to ignore. You know, the second SPY starts moving higher, this is the stuff that wants to lead. So if you see MU pushing through that 429, 430 area pre-earnings, it could show you, you know, it might want to run up until the event. But a couple correlation plays. Let's take a look at SNDK. SNDK similar, so didn't even get under the 50, reclaimed the 9 and 21 ridiculously fast. So just keep an eye out on that. But over 676, you have a clear shot to 725. You know, you can argue maybe get over 676 and then wait for the back test, because that's exactly what happened here. Went over 676. You know, failed on the back test. Same thing the next day. Tried to come over, failed on the back test. So if SNDK gets over, look for that back test. That's going to tell you what's real. You know, maybe maybe we're a little stretched from the 9 here. So again, go lightly, but, or you could argue if you're not already in it, just sit out because I'll show you the other plays. But that's 676, big pivot for memory to go higher. I say see other plays just because I think these are a little better in terms of risk to reward. STX, you can easily tell here. I can't even tell how many tests. 1, 2, 3, 4. You had almost 7 tests on this this 392 area, 393 area before it finally broke down. You know, had some good volume and then tried to get back above again, couldn't. But now here's the difference. It's got a really tight base under that 9MA. So if STX can just crack right back over that 393, 394 area, you know, you're breaking a key level and you're breaking back over the 21, it can have some room back up to that 407 pretty nicely. And then, you know, this is something I would take as a trade, especially if SNDK is following through, if MU is following through, and then I'll show you the last one here, WDC, if that is following through, which is a similar setup to STX. You know, you have the wick at a key level. The range to the upside's a little tighter on WDC, but you could still play it. So same concept, you know, over 280, you get 285, over 285, you get 296. These are good ranges. WDC has probably been the choppiest out of all of them, and maybe STX. So again, go lighter, but the setup is there and the catalyst is there for them to run into Wednesday. Actually, you know, let me double check on that. MU is the 18th. So yeah, it is Wednesday. So Wednesday is honestly a ridiculous day with PPI, FOMC, and MU earnings. That's a ridiculous day. So if you have a small account or, you know, you're not already positioned and stuff, I would honestly look at those as observation days and you know, don't kill your account trying to, you know, trade an MU lotto or trade during FOMC. Just chill. Just chill. It's going to teach you really good patience as well. But yeah, other than those, let's get into some individual setups. So STX and WDC probably have the most structured setups if you do want to play memory. Other than that, you know, please go light. Please go light. Let's take a look. CRDO, first one. So a couple things with CRDO. This one built a really, really good base, you know, after it got beat up. But the difference is here, especially right here on this pivot. They had a really good EPS report, you know, 412% year over year. They have triple digit earnings beats on everything compared to their revenue, sales, EPS growth, everything. So when you see that and you get that confirmation from EPS, you know, which I thought you got last time, but the market's not always going to be that friendly. So what I'm really looking for here is, you know, you have a good double bottom structure, tried to come down again, making a really tight base over this 9MA. So, you know, a couple things. We still have the 21 here. We have the 50 MA above. We have a really key quarterly at that 124. But what I'm looking for here is, can we get over this 119 and can we back test off of it and follow through? I think if we get there, you know, even 119 to 124, you're looking at a great percent profit on any options contracts. So the thing is, over 124, if you do get that push, you have a really big profit target up to that 134. You know, 50 MA, you might get some turbulence, but, you know, we'll see. We'll see where that one lines up when it gets there. Ideally, though, you have a clean setup with this pull off the 9MA, hold of a monthly, great confluence over the 21. This gets over 119 and then holds straight shot to 124. Something to look out for. Another really good thing, decreasing volume on this entire base. So, you know, ideally, that back test is really key. It could just wick like this and then smack down and give you that increase in volume. That's why wait for it to go up, wait for it to back test, see how it acts there. That's going to give you your entry. What is next? Let's take a look at. So we got AVGO. This one's not really an actionable one in terms of, like, you know, this week, but just something to note here because I think you have a good risk to reward if it gets down there. Let's do a rectangle. So just something to note. Really clear range here. I would argue right here. Yeah. Let me stretch this just a little more. I just really like this liquidity range. So you could even dummy it down to really here. It's where it gets kind of heavy on both sides. So if AVGO can smack and get down to that 306, you know, and when I say smack, I just mean an aggressive sell-off, maybe, you know, by Monday or Tuesday if it does get down to 306. You know, highly doubt it type of thing. If it did get down there though, I would love longs. If it tests 317 and starts hooking up, you could go long. You know, I'm not really going to focus on it this week, but that is another play just in terms of what your risk to reward is. You know, if you use 317 as your stop, you get 330 upside. It's a decent target on AVGO. But yeah, just a nice channel forming. You have really clear liquidity when you're talking about this 346 area. So I would just keep an eye on this. You know, maybe alert 307, alert 346. I think if it tests either one of those ranges, you know, maybe 346, you're looking for a breakout. 307, you're looking for, you know, still calls. So I would consider this still bullish. But yeah, something to keep on your watch list. Not really actionable for Monday, Tuesday. All right, let's take a look. All right, let's take a look at Spotify. Let's get this up. So Spotify, really good EPS beat after a pretty aggressive downtrend. So just a couple things to note here. Really smooth uptrend, you know, reclaim the 9 off a good earnings report. Really smooth uptrend. Something to note just for all trades, when you see smooth downtrends like this, it shows you there's good liquidity involved. So what I mean by that is you have a really structured, smooth continuation down to, you know, not only a quarterly level, you have 50 MA, 21 MA coiling, and it was all on lower volume. Excuse me. So what I'm looking for here is, you know, can we just get over Friday's highs? If we get over that 520 on Spotify, you have a really big range back up to 550, which on Spotify contracts would significantly pay. So great structured, you know, I know it sounds silly, but when you see multiple green bars in a row, multiple red bars in a row, multiple green bars in a row, it's structured liquidity. So, you know, sounds silly, but if it looks pretty, it's usually got really good liquidity. So just keep that in mind. So that structure down really caught my eye. Gets over 520, clear range back to the upside. Ideally, we see some sort of pop in volume, you know, when it does get over that high on the close for the day. But I'll be looking at Spotify over that 520 for a move back up to that 550 quarterly. All right, let's take a look at what do we got? GEV. So, GEV. I remember this one. So again, maybe not an actionable setup in terms of like, you know, I'm going to take this week. Might not even happen this week. It could though. This 846, maybe 847, 850 area, that pivot there is going to be massive. You know, you're almost guaranteed a 30-point range if it gets above that. You know, forget these wicks on the dailies. If you're looking at, let's go to a weekly. Let's go to a weekly there. We'll get one more level in just to make sure we have all forms of resistance. Let's go back to that daily. So over that 846 pivot, you have 865. I would argue almost like a magnet. You know, when you get these pushes over, last time it pushed over, tested. Last time it wicked below, tested. All right. You could argue here, 2 tests on the daily in between. Majority of the bars got there on a follow through though. That's the information you want to look at. And then you time it with not only if it gets through, it's going to reclaim the 9 MA, reclaim the 21 MA with both of them coiling, and maybe it gives you a pop in volume. But just something to look out for. Over 846, you really don't have that hard of resistance at all until 864, 870 range. So just something to look out for. And it's also, you know, you factor in this is a monster stock delivering monster numbers for their EPS. So just always something to know. You want to follow strength. That gives, you know, any stock making significant money is going to give it that much more conviction when it does go up. So just something to note. You want to look at leaders. Let's look at ASTS. So I don't know when this happens, but if this gets over 93, I think it just goes to 103, if I'm being honest. So and that next pop over 93, just be ready. It should be a magnet to 103. There's a chance they rip it off of, you know, news and you don't really get a proper fill. If that happens, so be it, out of your control. But if this gets over 93, I'm actually pretty positioned. I'm pretty decently positioned in some longs, but you know, I'll probably watch it, but just trade for everyone else. Over 93 could be a magnet to 103. And then in terms of what I'm positioned in, let me see. I have, let's see, I have 110 calls for March 27th, and I have a 96 call for next week as well. So I have 196 call, and I have 5 of those 110 calls for a couple weeks out. So I'm already positioned in it. You know, maybe I add on that break. We'll see how the premium is, but just definitely something to look out for. You know, you got this big influx last time it went over, and you're getting 1, 2, 4, 6, 7 days of consolidation. Every single day is on lower volume. That's a very, very key thing to note. That first pop over 93, not only should it give you volume if it gets there, it should run to 103. It's the way the chart looks, it's the way the theme is setting up, and that's exactly what happened last time. So just stuff to keep in mind with ASTS. TMDX, what did I have on this one? Interesting. TMDX is a simple trade here. So very simple trade. So just a couple things. This is a quick trade, but it's a simple trade. Over Friday's highs, you enter long. Your stop loss is the quarterly level. Your target's the next quarterly level. So the thing here is 124 is your entry. 121, 122 is your stops. That's 2 points down, and you have 10 points up. That's a 5-to-1 risk to reward in terms of dollar stops. You know, maybe if you're thinking options profit, it could get a little different, but however you play it, it's a 2 to 10 reward, 1 to 5 reward. So look at it like that. But if it does get here, let me just actually mark this up too, just because I've been noticing this as I'm talking. Yeah, I figured that. So clear range here, low to high, and of course this is 0.79 fib. So the other thing I was going to say, if it does get under 121.65, you know, in theory it gets 112. The only thing I'll say is this one had a phenomenal earnings report, and it is decreasing volume on this entire downtrend, aggressive downtrend. So it shows me it's not really, it's more manipulated in my opinion than it is structured. So just stuff to note. You're at a 0.79 fib. You're at a massive quarterly. Volume's decreasing on the downside. And yeah, your risk to reward is to the upside. You know, if it does get under 120, that 121.65, maybe wait for a back test and then a fail again if you do like the shorts. But I'd be looking for the upside on this one. So just stuff to note. Last one. So this one's a little interesting. Palantir. You have a let me look. Let me get this. You have a good trend line forming. You have a good relative strength kind of base forming compared to the rest of the market. You know, just in simple terms, if I look at Palantir the last week, and then you compare that, oh there it is. Then you compare that to how SPY moves. You know, the last week, SPY's very more volatile. SPY's at lows. You know, compared to what it's at, you know, the past couple months. So, you know, I know that translates to Palantir's gone down for the last couple months, but you have to consider what's turning now, where could money be flowing to now. That's what I look at Palantir as. So you're getting a really good flag base over this 148.22 quarterly. You have 9 MA confluencing with this 50 MA, which is good, especially if it can turn over it. But what I'm really looking for here, if Palantir can even get over, if it even gets over Friday's highs, I mean, your target's not huge. You have 158 before you get any real resistance, which is still 4 points. That's going to give you a good profit. But if it gets over 158, I think you get a straight shot to 165. And then, you know, even that case, if it gets over 158, this starts to become, you know, the price action becomes a little different on that second follow through, and it starts to become a leader in terms of all the relative strength names from the past month. So just something to note. That whole software theme's been beaten up. You know, CRM and now probably don't look nearly as pretty as Palantir. Yeah, they don't look nearly as pretty as Palantir does. But you know, just something to note. Software's been beaten up. Palantir has, you know, in theory, it has great earnings. I know it's significantly overvalued, you know, in terms of PE, but it's making money. Simple as that. So just something to look at. Overcut that Friday's highs, get over the 50 MA. You should get 58 on that tag. Yeah, other than that, nothing else to look at. So just a quick recap. MU earnings on Wednesday, FOMC on Wednesday, PPI Wednesday. What was it? Jobless claims on Thursday. Other than that, no real big earnings, but MU is massive. So again, those MU numbers, 9+ on EPS, ideally 20 billion plus on revenue, 65% or plus or more on their margins. You know, those are all the key factors I'm looking for that memory case to really be underlooked by institutions and maybe base retail traders and kind of get that second leg up off those numbers. And then yeah, other than that, chill week. We'll see what FOMC does, and then yeah, we'll see what these individual setups do. All right, take care.